bring in Michael Pugliese, senior economist at Wells Fargo. Michael, you think the Fed's going to hike or not?
Yeah, well, thanks for having me, John. And I think it's a close call. I wouldn't be surprised if they went 0 or 25 basis points. But in my view, I think they're a little more likely to pause. I think for policymakers at the Federal Reserve right now, there's been a tremendous amount of uncertainty, volatility, stress in the financial system over the past couple weeks. But there's also been a pretty big policy response from officials. And I think they want to ensure that the medicine takes in the coming weeks so that they can resume monetary policy tightening at the May meeting and potentially even beyond that. You know, put another way, I think the last thing they want to do is worsen the financial system stress we've seen in recent weeks and then not allow them to get to a tighter monetary policy position down the road to ensure their job on the inflation fight is complete.
But given that, does this banking crisis make it more or less likely that the inflation giant gets slain this year? I mean, if they back off too soon and this banking crisis is transitory, then don't they have that much more to do for that much longer?
Yeah, I think that's exactly right. And that's why even though we have them pausing at the March meeting, we still have 2 more 25 basis point rate hikes in May and June, based off that exact idea that in the near term, there's still a lot of momentum in the economy, whether you look at the very strong pace of job growth over the past few months, consumer spending that continues to grow at a pretty solid clip, or inflation that's improving but is still running at a 4 to 5% pace through the kind of noise and trends. So I think that's exactly right, and it's why I think the Fed will resume monetary policy tightening even if they stop in March.
Well, what percentage chance do you think there is that the Fed actually has to stop altogether because the economy has slowed down that much that we really are heading into a recession in the near term? There's some people out there, I mean, the Fed's going to have to cut in the next couple quarters. Crowd is back. What's the percentage likelihood that that's the case?
Yeah, I think in the next quarter or two, it's probably a fairly low probability that they're easing, 10 or 20%. But if you stretch that horizon out further, I think the probability goes up quite a bit. So we've had a recession in our forecast for sort of towards the end of this year since 2022. And this has really only, I think, emboldened that call. So we've got monetary policy easing in our forecast around the end of the year. So while I don't think they'll be easing in May or June or July, if we're talking December or particularly 2024, I think that's probably over 50%.
Michael, does this regional bank crisis that we have been through, are in, I mean, we'll see how far through it we are, does it affect perhaps the type of landing that we get in this recession that you're expecting? Is it a deeper recession, perhaps, if the economy is slowing down more than we think? Because it's not just the Fed slowing it down, it's potentially these regional banks loaning out less.
Yeah, so I think my base case would still be a mild to moderate recession, but it certainly increases the potential error band or uncertainty. When I think about what characterizes mild or moderate recessions, like what we saw in, say, 2001, it's not a full-blown financial crisis like we saw in 2008, 2009. And, our base case is certainly not for that to happen. But if it did, right, then I think we would certainly be deepening that recession call I referenced a moment ago. And we've only got unemployment peaking at 5.25 or something like that, which is a relatively modest increase. So, that's not my base case, but the probability has clearly gone up for that outcome relative to even just a couple weeks ago.